Hello, I'm Shaun Richards of Notayesmaneconomics, and well, the story today, there really is one that particularly sticks out, which is of course the Bank of England tomorrow. This is a curious position because we are where we were, what, nearly 10 years ago now, in terms of the fact that the bank rate is 0.5%. This poses a particular problem for Governor Carney and his crew, because if we look back, and we look back to the summer of 2014, he promised that interest rates would rise sooner than markets expect. There's been a bit of welshing since then about what he meant from official circles, but if you recall the markets on the next day, and I do, that was taken as a clear green light and for something that was going to happen immediately. Except now we are over 4 years later and that hasn't happened. So we find ourselves in the zone of explaining why he's been called the unreliable boyfriend. And much of the preceding 4 years, between now and then, has been that sort of system. Of course, there was a brief change over the era of Brexit, when he decided the economy was going to collapse and made various moves, cut bank rate and so on. Planned to cut it again, but fortunately discovered he was wrong. Fortunately on both counts, economy was doing better. But now we come to an odd situation. And my reason for saying that is, I would welcome the idea of bank rate being higher. I think it should already be higher. We should be at 1% or above now. Instead, we're still at half. Except it comes with a conundrum, which is as follows. It matters as much when you change interest rates as what you actually do with them. Particularly down at these levels, because between 0.5 and 0.75, I'm sure there'll be someone somewhere that's especially adversely affected, but in general that's not a lot. And if we look back over time, we see periods whereby there have been moves much more than that quite quickly. For a different reason, I look back to the summer of 1988, earlier this week, and that had us going from 7% to 9% within a month. So much higher level, but also vastly higher rate of change. So we come back that this isn't especially a big move, but why has it taken so long? Because frankly, economic times have been better than they are now. If we look through the position of the UK economy, we don't have the second quarter growth figures yet, but it looks like they were probably better than the first. We only have the numbers till May, which was 0.2%, so actually not any better, but it looks like June was an improvement. So there's that. A little bit, but even so, even if you take an optimistic view and say the UK economy would declare 0.4% growth, that's still below the normal level where the Bank of England would raise rates. Inflation, yes, it's above target, so you could say that's a tick, but then of course you have the problem that you've ignored the phrase where inflation was even higher. So there again, awkward timing-wise. We look back to 2014-15, things look far better than they do now, except he didn't raise. One of the things I raised with the governor back in February, I wrote to him on the issue of inflation, was that at that time, house prices had risen by 30%. Some think that that's been his real objective all along, to get house prices higher. 30% for those. Inflation at that point had only gone up by 7%. That was the point of me contacting him. Now, quite a different situation. He'll raise into house prices, which London are falling. Around the country are doing better in some places, but net only a small rate of growth. So here you see the problem for him and the other 8, assuming you feel that they have any influence at all, which is that why now? So even if he does it, he faces the problem. That's just simply that. Why now and not before? There were better times for it. If you look at the other side of the argument, of course, for those that don't believe it's necessary, from their perspective, it's even worse, because if we look around, for example, say Japan, people expected maybe even a hint of easing from there. There wasn't very much. Only yesterday, we got figures from the euro area for economic growth, which were disappointing again. So they dipped from what had been 0.7 on a quarterly basis, 0.4, now 0.3. Numbers for France and Italy were particularly poor. In terms of a trajectory, in some respects, we've been similar to that. So again, why would you raise now? If we go deeper into the money supply numbers, then so far this year they've been weaker. I'm talking here broad money and so on. The next area, which again would be a reason for raising rates, which is unsecured credit, which is still growing at just under 9% a year. So there's a clear yes. And in fact, we've just got the number for student loans. If we put them in, now that's only for the year to March, but the rate of unsecured credit growth is 11.3%. So again, clear case for raising, except it's been over 10%. So why didn't he raise them? So through the various examples, I've shown you that we're back to the question of why now. If we move to the numbers and to the actual breakdown of the Bank of England and who might vote with him, there's several ways of looking at this. If we do get a raise tomorrow, I wouldn't be surprised if the vote's 9-0. This comes from a couple of routes. The first is the idea that mostly they're really Mark Carney's cronies and do the same as him. That theory, of course, begs the question why we have the other 8 members at all. On the other side of the thing, just simply comes that they have been not really very clear about what they think. For example, Ben Broadbent was only recently saying that he wasn't sure which way he would vote. So you could see a scenario here whereby if some make a case for a bank rate rise, others might just simply fall into line because frankly they're weak. So this is the question here in terms of what we might see, what the numbers will be. I wouldn't say though, and if we look at the past, a 9-0 vote would be considered quite strong and we could expect another rise. I'm not so sure about that because we've had this phrase limited and gradual for ages, so they've been chopping down expectations of what you might get. But so far, of course, we've had nothing at all. So we get one, what will be the next one? Say the economy does then slow a little. So the Bank of England is between a rock and a hard place. Why is it there? It's because it's put itself there. It's missed much better opportunities to raise interest rates. And so here we come to the next part. Is it so sure that they'll do it? Markets seem to be, but because of the unreliable boyfriend reputation, because some of them are very hard to predict, I think the situation is probably more like 2/3, 1/3, 60-40. There is still a chance that they'll balk at the end. Thank you.